go on to dollar yen, don't forget you can ask any questions in the chat or underneath the video. Like I said, don't forget to get my free training underneath this video. We're going to cover the dollar yen right now. Don't forget to like, share, comment, and subscribe. So the dollar yen is really, really interesting, and I love covering this as well as the Swiss yen. I've done the Swiss yen a lot, so I am going to concentrate on this now. Now, the fact is with yen pairs, something that's really, really important. Yen pairs can stretch for an extreme amount of time in either direction. So even before you start thinking about trading them, or if you are trading them already, just consider that inherently it's somewhat of a risky asset, somewhat of a risky FX pair. So straight off the bat, for that reason, I would consider when you're trading it just to half your risk or quarter your risk. Just makes things much, much, much smaller. Because if you're getting a long stretching market that just keeps going and going and going, you may find if you don't have appropriate risk plans, like my members, like myself, that these stretches in the market are unsustainable for you, and the market can sustain its up move longer than you can sustain your equity. That equilibrium that starts to get imbalanced is not good. Okay, it's not good at all. So if you just look down here, I mean, only and this actually started March 2011, or the lowest low was October 2011. It's now October 2023. So for 12 years, you've gone up. Okay, you can see if I put my 12 monthly on, you've gone up for 12 years. Now that is in part due to the fact that you had gone down for 10 years, okay, or 9 years you'd already gone down. So it's fair that that was not completely out of the question, because you'd come under this low in 95 as well. So that was the lowest point it had ever been. So you then have from 2015 to 2020 as a fall again, and then you get this big rise. So I would say over time, since you've come to this low, you've gone up and up and up. Okay, the price or the conversion rate, the currency rate, okay, the exchange rate is practically double. Okay, 100%. So that's what I mean by long ranging. Okay, it can go and go and go and go. Now, what is more relevant is a couple of things. When it last went and went and went, like I said, it came from 7.8, okay, down here, or 7.5 area to 1.25. So a considerable up move. It took a long time, but you'll notice within that is these big stretches here. These big stretches. So you've got one big stretch there from 2011 to 13, or less, 2012 to 13, and then you've got a really quick one there from June 14, Jan 15. Okay? Now, what follows that is a significant retracement right back. It's over 100% of this move, and from the overall move, it's probably about halfway. Now, your last one that took you down here in more recent times came off the back of an even bigger surge. Okay, so what's happening is the yen is losing value rapidly. This has gone on for a very long time. Okay, but you've come from 102 to 15, so about 50% of an up move, and your retracement back took you to 127. So again, you're looking near halfway, exactly halfway of the move. Okay, so the extension that you see, okay, and by the way, I had an editor's pick on TradingView for this. I called it short up here. People said it's not falling, it's never going to fall, and then it just fell extremely. Then I said get it long. No, you shouldn't be buying it, and then it goes up. So where we are now is at these highs. Okay, now what is important really at this point, I would say, is the fact that that candle, your latest one, has had slight rejection right at the top of this. So at the moment, you have got ultimate short side value because you're back where you were when the market tumbled. Now, traders who make the larger money market, They like areas like this because they're aware, because they're professionals, they're aware that that is an extremely high price in the last, okay, the last time you were there was 1990, okay, before this. So they know that is an extremely high price. That's why it fell the last time, okay, and your stock oscillator still remains high and you're back to it. So that obviously is an area to get short because you've seen it fall before. It's really important to get out of the mindset that these things are random because they're not. Okay? The orders to the short side go in where there is short side value. In other words, where traders can see clearly that they have value on their entries. Right? So you've got a very high stochastic oscillator. You're very far off your nearest moving average that exists down at 146. And if you're trying to trade this with no risk plans, no hedge plans like I have and teach people, then this will be unsustainable. If it keeps going higher, you will get burnt out. Now, just like I was saying for gold, okay, not saying this can't go higher, and I'm fully prepared for it to go higher. I've got full plans so that if it does go higher, it's not going to hurt. Okay, so just be aware that it can go higher, but your job is not to guess how high it's going to go. Your job simply is to take value in the market. And you can see that what you have now is exactly that, because the last time you got to this point, you fell. So clearly there is a short bias there. Okay, that is factual. That is a factual piece of information because you can see it on the chart where I've labeled it. Okay, that is a preferred short zone. So you shouldn't be buying here for a start. It's just too high. You can see with Japan news and rumours about intervention, the market plummeted, but then it rises right back up again. Now, you can't have a situation where Japanese yen is just so devalued and worthless. People who've been having it long, again, similarly like gold, will want to sell their position to reap the benefit having it long. Okay? Like I said, if you don't sell your position, you will never make money. Even if even if you bought here, if you never sell, you cannot make money. Your position will be in profit, but you'll never get the profit unless you sell the asset, you sell the holding. Okay? So if you bought all the way up and you exited along the way, which is preferable really, you would be in gains already. But there are people who will liquidate larger positions now because they've got their full benefit. They don't know if the market's going to get higher, but really, I don't think they care. What they're looking for is something larger. So I wouldn't be shocked if you get that eventually. But just from a factual market value perspective, that is more of a short zone. Now, if I was to look long, I would probably want a considerable pullback, okay? Because if you're buying these highs, like I said, you're buying short value. And if you buy short value, then you're going to get stuck because there's no long side value, believe it or not. In other words, the price is not viable for long entries. So you can see you've got your earliest moving average there. That's really key as a technical part. There's bits of minor price action you're falling to, and you've got this very high stochastic oscillator and generally a very high price. Now, again, we've got the news coming out today. We've got employment data in the middle of the day, I suppose probably depending where you are in the world. Then you've got ISM manufacturing and the Fed rate later. So I wouldn't be shocked if the dollar yen dawdles, as well as many other dollar pairs, before that occurs. But you might find that that moves markets a lot. Okay, so everyone looks to the Fed really as a status quo. You may find that that kind of volatility feeds into the market. If you do get a larger fall, probably look long lower. And if you're going to short this, I would just do it lightly. Like I said, first of all, if you're trading yen pairs, you've got significant risk because they can stretch a long way, as they have many times for many years. So drop your size, spread things out, and it's probably going to get a bit easier. Don't bank everything on this. Okay, it's not definite. Just drop your risk, trade value. So that is the dollar yen. Don't forget to get my free training underneath.